This is the Bank Nifty daily charts. You can see that the market opened up gap up and stayed pretty much range bound through the day today. This is the 15-minute chart. This is kind of how it went. So the market, as you see, opened up gap up, took the resistance of this and actually then started coming down. One of the things that we ended up doing today was keeping an eye on the market, because every time if we look back, we can see that as the market's starting to rise, there's a correction, a rise correction. So one of the things that we didn't do, and that comes with sort of experience, is we waited to see if the market was going to sustain over this and then make its move to 35,500, or was it going to start correcting. Eventually the market stayed very range bound, uh, and we ended up getting some decay and ended up closing a couple of accounts. So you can see this is kind of the range in which the market actually spent most of its time. These swing lows were taken out, and this resistance was also taken out. Overall, in comparison to sort of taking some directional moves, I sold a put around here and eventually got some profits over here. I sold some calls here. If you look at the 5-minute chart, you'll see that it looks a lot more volatile. And I was selling, you know, as the market was rising up, selling some calls, and eventually got a couple of directional decisions that also went in favor for us. And every time sort of stop losses were getting hit, we were adjusting the bigger plan of moving things up or down. Now, coming back to the 15-minute chart, one of the things that was good today is we got decay, right? What was 560 odd levels that the market closed at today in terms of straddle. Um, Yesterday, the straddle closed at 660, so about 130 odd points was got in terms of decay. So we were able to close a couple of accounts. We've got two accounts still running. Now, what's going to become critical is going to be today's highs and lows, because the market was compressed in terms of staying range bound. So I think that these levels are going to end up becoming critical. So 35, 300 odd levels if the market breaks, or the 35,000. The market's definitely looking upwards if we're looking at the 15-minute chart, or even if we look at the 1 hour chart, we can see that the market's definitely got an upward trend. It's starting to consolidate here, which is a good sign when markets are starting to move up. So it'll be interesting to see how the market actually reacts, what direction it will take in order to continue its either move upwards to 35,500 levels or break down to potentially 34,600 odd levels. So this is going to be our plan for tomorrow. We've got about a 13-1400 point range, which straddles at 530. So there's considerable amounts of decay left for 2 trading days. So our objective is, we're hoping the market kind of opens up flat, stays in this range for some time, so we can get the benefit of the straddle and move forward. Overall, we've got a slightly delta negative, 2% negative, so it's not that big of a deal in order to adjust, and we've only written 70 odd percent. We still kept a lot of ammunitions to play strategically in case the market really makes some big moves. And as of right now, in terms of global perspective, we're looking at everything looking pretty much flat to slightly up. So that's kind of exciting for us for tomorrow. So that's our plan for tomorrow, waiting to see what happens at these levels. Ideally, if it stays flat, then we can potentially expect a swing both either on the upside um, or downside, because the market has pretty much moved up depending on what adjustments come in for the final week of the year. Um, Again, like always, we've got 30% more to do. So we've got premiums that we can write, build on our current positions so that we can end the last trading week of 2021 in